Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to review the key US stock indices that we follow. And this video is for educational purposes only. It is not a financial advice. Today is 26th of May, 2023. So guys, what we are looking at is a daily chart of the Nasdaq 100 E-mini futures. And look at this fantastic rally that we have been having over the past 1 week. And that rally has been powered by the artificial intelligence stocks such as Nvidia. So I did a video yesterday about in which we covered the key US stock tech stocks that we follow. Do watch that video. Towards the end, I will also post a link to that video and also in the description. That will give you some idea of what we are looking at. So guys, here one of the key things that we were looking at was that we had a key level of 14,350 roughly. In fact, between 14,240 to 14,365 roughly, in that zone as a potential key resistance. And that's because this is the level which is 61.8% Fibonacci retracement of the highs reached back in 22nd of November. I believe these were the all-time highs. And then also the 78.6% Fibonacci retracement of the highs of 29th of March 2022. So we have a confluence of two Fibonacci ratios coming together. And this means that, we need to pay particular attention to these levels. And here what we have seen is today a fantastic move which took us right into this level, right into this zone. And this zone we had identified, if you look at our past videos, a week in advance, that perhaps market was actually trying to target this, because this is, if you look at this black ABCD formation, the CD leg was 1.618 times the AB leg, and the orange one was a smaller ABCD inside the CD leg, and the momentum was that so much strong that it looked like it's just gonna go and gravitate towards this level. And here today, on a longer holiday weekend, we are right in this zone. So statistically speaking, before key holidays, the markets tend to rally, usually, not always. I think there's some statistics out there, you can Google about those. It's better of a 60% chance that the market will rally before a key holiday. So this rally, a really strong rally, was kind of expected off the some news which came out of the debt ceiling negotiations going on, that perhaps they were making progress. So maybe it was led because of that. But here on this channel, you know that we always look at the technicals, and a week in advance we get identified this level, and there we are now today. So we'll be watching this level really carefully, over the next week, and we will see how the price is going to behave around this level. Let's move to the ES. So there we go. Again, we believe that we are moving in this ABCD formation, highlighted in blue ABCD, which can actually take us much longer to around 44.30. But we do have some resistance coming in. And one of the key things is that we have got this 61.8% Fibonacci retracement coming in from the highs reached back in 4th of Jan 2022. So quite similar to what we see in the NQs. We have this 61.8% Fibonacci retracement coming in, and that may provide a strong resistance because of the pattern formation that we are looking at in the NQ, the NQ 100. Because if you look at the rally which has been taking place, market going up since 13th of October 2022, tech has been leading. And if tech begins to go into a region where it could have strong resistance come in. That's going to play out in other indices as well, including S&P 500. So although we have this ABCD formation, the momentum is strong as the price actually found support from the 20-day moving average highlighted in blue right here. What we also have to be watching is this key resistance coming in at 61.8% Fibonacci retracement around 4260. Also, let's take a look at small cap Russells. So if you look at Russell after forming this nice ABCD formation here, 1-to-1 projection, it's just had a one heck of a sell-off, and it's just been, in our trading range here. It really needs to get above 1852 to be able to, try to make a recovery towards the highs again. So that's another thing that we really need to be watching, the small caps, because these are the stocks which are actually quite sensitive to the interest rate movement. So it's good in a way that it's actually come back and tested the 78.6% Fibonacci retracement of the lows of 13th of October 2022 to the highs of just like February 2023, and it's just been consolidating for a number of months here, and not moving actually much lower. So that's kind of good for it, but also it tells us that maybe the rally which we have seen in the tech and the rally which we are seeing in S&P 500, maybe it's gonna have some pullback as rallies do have a correction come in. Okay, guys, so let's also take a look at the E-mini Dow Jones, and this one is again a different index, which is a different kind of price action compared to the NQs, the Tech 100, and also the S&P 500. It's just been more sideways to kind of declining right like this. But the key thing is that it held the 61.8% Fibonacci retracement, so that's a possible support. And look here, just sideways action, not as strong as what we see in the NQs, the tech stocks. Also, it has some key banking stocks in it, like the Goldman Sachs, and I believe the JP Morgan is also part of it. Do watch our video on the key banking stocks that we have done. We followed that segment. I will do another video perhaps tomorrow about it. And the patterns over there tell us that perhaps the downside in some of those stocks might not be over yet. So that's also reflecting in the E-mini Dow Jones index. So now what the kind of markets that we have here, the US equity markets, we have to really look at each one of the indices and then see what kind of picture is being painted, because in my opinion it's a bifurcated market where different indices hold different kind of stocks, and they have a different kind of weightage. So Dow Jones is a price weighted index. So here are the stocks which have a higher price. Their movement is going to have a bigger impact in the Dow Jones index. Other indices, they are market weighted methodology, so their movement is a little bit different. So we have to analyze the key indices, including the small cap Russell 2000, and then try to understand what kind of picture is being painted here. So again, the levels that we have reached in the NQ 100, Nasdaq 100, 14,350, that region is pretty strong resistance. So we'll have to watch very carefully how the market is going to trade next week, and we'll be watching it. So thank you guys for watching the video. If you find the video of educational value, please do like the video. And if you find our channel interesting, how we look at the price action, pattern recognition, please do subscribe to the channel. Thank you very much for watching. Good luck and good trading.